Hi, my name is Jared Tromer, and I would like to welcome you to our 2015 Bergen Road Reports video presentation. We are covering Midsouth Bancorp, Inc. After doing extensive research and analysis, me and my analyst team, consisting of Aaron Sachs, Yeri Shin, John Vigil, and Joe Wilkinson, came up with a 12-month target price of $20 and an investment rating of market outperform. On February 7th, 1985, C.R. Rusty Cluchet founded Midsouth Bancorp, Inc., a holding company for Midsouth Bank N.A., headquartered in Lafayette, Louisiana. This regional bank provides commercial and retail community banking services to markets in Louisiana and East Texas. Currently, Midsouth has 58 branches across Louisiana and Texas and has accumulated approximately $1.9 billion in assets. Its market capitalization is $169.33 million. Midsouth, like most small banks, is dependent on the regions in which it operates. For example, Midsouth currently has about 9% of its total loans in the Lake Charles area. This region was booming when oil prices were high, but now has about $46.6 billion in oil-related projects on hold while oil prices are low. Regions such as this that are so reliant on oil prices can see a ripple effect. The low price of oil may cause increased unemployment and lower wages, which means less purchasing power for consumers, and in turn, leading to other industries in the area struggling. While areas such as Lake Charles have fallen on hard times, the cities of Dallas and Houston are poised for economic expansion, offering Midsouth some potential for future loan growth. Both of these cities are expected to increase in size and in average household income. Overall, the growth potential for the different regions of Midsouth operations are mixed, but the bank will be wise to concentrate its future operations in the more promising locations. As we look at the historical stock price graph, it's easy to see that Midsouth has steadily grown throughout the last 4.5 years. Like any bank, the stock price will experience some volatility due to economic cyclicality. Although Midsouth's stock price was experiencing a steady rise, the stock price has dropped significantly since the summer as oil prices started to plummet. While Midsouth has not experienced any tangible losses due to the oil price drop to date, investors are worried about the potential for an increase in non-performing assets if oil prices do not rebound in the near future. The stock's 52-week high was $20.34 on July 3, 2014, and its 52-week low was $13.67 on February 2, 2015. The stock currently trades at $14.80. As you can see, about a third of Midsouth's loan portfolio is made up of commercial and industrial loans. Included in this category is energy lending, which makes up approximately 1/5 or 20.6% of Midsouth's total loans. The company distributes 70% of its total loans in Louisiana and the other 30% in Texas. Lafayette is the recipient of the largest amount of loans at about 22% of the total. Here are the 10 largest investors as of February 9, 2015. The ESOP is at the top of the list with 581,513 shares, taking up 5.17% of the total number of shares outstanding. Institutional investors own a significant portion of Midsouth's shares, however, insider investors also take up a large portion. Midsouth Bancorp had 17 significant insiders as of February 9, 2015. The top 9 insider holders are current board members. The last time an insider from this list sold a share was in November of 2013, and the number of shares held by these shareholders keeps growing with more share acquisitions. The large number of insider investors shows that management has confidence in the company's stock price outlook and displays to shareholders that they have a lot invested in their own company. Midsouth's market share for its region is 0.19%. While this market share is very small, Midsouth is able to distinguish itself from many other banks by focusing on energy lending. In particular, Midsouth loans primarily to oil field service companies, which take specific knowledge of the industry to be effective. In addition, the bank consistently finances the operation of many of the companies that it loans to. The result is that the bank is able to charge a much higher rate on its loans compared to that of its peers. The company takes more risk investing in energy companies and offers continual lines of credit. Midsouth's conservative specified lending strategy is evident when comparing the bank to many of its peers. Loan-to-deposit ratio is simply the total loans of a bank divided by its total deposits. The bank has the lowest loan-to-deposit ratio by far of the group as the bank makes a conscious effort to keep its ratio around 80%. This means that the bank only uses 80% of all of its deposits to finance loans. While the argument can be made that the bank is not as efficient as it could be, Midsouth prefers this approach so that they are able to cover any potential losses from loans that default. Midsouth's net interest margin also illustrates the bank's energy lending strategy. Net interest margin measures the difference between interest income and the amount of interest paid out to its lenders. Midsouth's net interest margin leads the class at 4.63% and is above the average by almost a full percentage. This is no surprise, as the bank's energy lending strategy allows it to earn a higher yield on its loans. Midsouth's PE ratio is the lowest of its class and less than half of the peer average. PE ratio is the price of a stock divided by the earnings per share of the stock. This extremely low PE ratio provides us further evidence that the stock is undervalued and should rebound in the coming year. Another category where Midsouth leads the pack is in its non-performing assets divided by its total assets, or NPA ratio, at 78 basis points. Midsouth is about 25 basis points above the average in this category. Non-performing assets are loans that are in danger of defaulting or have defaulted. While this large NPA ratio may be a red flag for investors that worry about the decline of oil prices, the bank has not recorded any non-performing energy loans to date. Like any bank, Midsouth garners most of its revenue through its loans. The bank has made significant progress in its loan growth, as its total loans have grown by 12.78% since the end of 2013. In order to forecast loan growth, we consider the growth rates of each type of loan that Midsouth offers over the past 8 years, 3 years, and 2 years. We then calculated a projection for the growth rate of each type of loan by weighting each of these rates. We weighted the 8-year growth rate as 20% of our projections, the 3-year rate as 35% of our projection, and the 2-year rate as 45% of our projection. The reasoning behind these weights was to give the most recent growth more importance over the earlier rates. We used these computed projections for the 2015 and 2016 loan growth forecast. We then applied the historical loan growth annual average of 8% as a terminal growth rate until 2026. We then took the historical average of the bank's loan yield per quarter and applied this percentage to the loan projection to obtain net interest income. We estimated a 12-month target price of $20. We did this by taking the average of the discounted cash flow valuation, the peer group PE multiple valuation, the historical PE multiple valuation, and the price to tangible book value valuation. We gave each valuation method an equal weight of 25% when determining the target price. Because banks use their cash differently from companies in other industries, we used a DCF model discounting the net income instead of free cash flows. With a risk-free rate of 2.31% from the 20-year Treasury rate, a market risk premium of 5.7%, and an unlevered beta of 0.94%, we calculated the cost of equity, or in a bank's case, the weighted average cost of capital. After applying a tax rate of 36.5%, after-tax weighted average cost of capital becomes 7.67%. To calculate the discount rate for Midsouth, we adjusted liquidity risk premium to 7% because the market capitalization of Midsouth is small compared to its peer group. Therefore, our estimated share price for 2015 is $13.63, and our one-year target price from today is $15.62. We used a relative multiple method of PE, as it is a common method of valuation for financial institutions. Midsouth's peer average PE multiple is approximately 19.38x. By multiplying the average PE by Midsouth's estimated earnings per share of $1.35, we arrived at a target price of $26.17. We also used a relative multiple method of P over TBV, which is another common method of valuation for financial institutions. Midsouth's peer average P over TBV multiple is approximately 165.54%. By multiplying the average P over TBV by Midsouth's current tangible book value per share of $10.46, we arrived at a target price of $17.32. Because of the wide range in target prices between the valuation methods we used, we applied a historical PE multiple. By multiplying Midsouth's current trading multiple of 9.2 by estimating its earnings per share of $2.23, we arrived at a target price of $20.50. After multiplying each separate target price by 25% and then adding the weighted target prices together, we ended up with our result of $20.